Good afternoon, this is Ken Long from Tortoise Capital with a review of the weekend trading report for June 21st, 2014. Market remains in bullish, quiet conditions on an annual basis using weekly RSI 14. We're back into overbought at 72 out of 100. Short term, using the 10-day NDX, we are also overbought with a score of 96 out of 100. Looking at the market mosaic, we have price relative to the 200-day moving average at 8.70%, or white bullish, a little over 6.5% cushion to sideways markets. The 5-day slope of the 50 improved to green bullish at 0.58. That's a favorable sign. ADX increased to 27.8, a strong upward trend. That's about the first time in 2 months we've been able to say that. ATR percentage is very quiet at 0.57%. The risk index is the 30-period moving average of the VIX divided by the 10-period. The threshold score is 1.0 to distinguish between risk on and risk off. The current reading is a 1.02. That is a risk on condition, meaning that riskier assets are favored. We take that score of 1.02 and compare it to the last 5,000 trading days. We get a Z-score, or the risk Z, of 0.21. This histogram shows the 90-day time series of that indicator and how it has declined from a reading of 1.0 risk Z down to 0.21. No change in the blended monthly rebalancing. The next rebalancing is due on or about 1 July. This is the current holdings that you see for the ETF 13, 22, and 32 portfolios. The current leaders, based on the readings as of this past Friday, are shown in this box here under current leaders. In ETF 2, the theoretical exposure remains at 100%. The model portfolio is at 100%. These are the readings from the ETF 13 and 32 portfolio using that blended monthly rebalancing. You can see of those two, only agriculture is on a cash position that's priced relative to its 4-month moving average. This is the ETF Max, and this looks at those symbols, the top 50 symbols out of that 1,300 ETF database. The ones I'm interested in tend to be the ones that are green on 3-month and white on 6-month. That looks like early strength. And so we're interested in Brazil, Colombia, Brazil Consumer, Interbolsa Colombia, and then Global Copper. That Global Copper is a pretty good sign for market conditions going forward. Conversely, those that are white and then green, such as the DB Commodity Long or the semiconductors, that looks like the shorter term strength is declining faster than the longer term strength, so we would prefer not to own those. This is the top 50 or so in the S&P 500, top 43 I guess, in the S&P 500, based on that same 3-month and 6-month look back, and it includes the sector ETF that they are a member of. So XLE and XLK are right at the top of the list. So ConocoPhillips should be of interest. It's green and white, as is Apache Corporation, Chesapeake Energy, and then this stack here of C.H. Robinson, Intel, Schlumberger, and Hess. Market health check, looking at the last 4 months, the vertical blue lines are 10, 20, and 30 days of look back. The horizontal red lines are support levels that have held in the past. These would act as price targets on the way down if price were to crash from here. We are in the green area where I want to, by default, be long on the intraday trade. At the first sign of strength, I'm buy-in, typically. If that price had pulled back into the yellow, then I wait to see a little more definitively what the daily trade direction is going to be before I commit that day. And then if we got below this line into the red, my default orientation would be short. But you can see the 10-period regression line and channel here in the blue, and the 30-period in black, lagged by a day, both pointing steeply upwards. So we got a strong bull here, and price just had pulled back to the edge of the river, and then has bounced over the last 3 days on a nice support right here. That's the dragon is this red shaded area. That's a 10-period Bollinger Band plus or minus a half SD, and that's a front runner or earlier indicator for the direction of the river. The river is the dark blue shaded area. That's a 30-period Bollinger Band plus or minus 1, and then the lighter blue shaded area is the flood plain, the 30-period Bollinger Band plus or minus 2. You can see we're back into overbought conditions here, and then the jaws of PPO closed after a brief flirt with the downside, and now are poised to open again to the upside. You can see that ADX is rising, still under 30, so there's room to go for this upward move, and bulls are in charge with the plus DI exceeding the minus DI. The regions of the world market model using the ETF2 lens. You can see the strength is in the globals right now, with EFA the strength of 63 and the S&P at 62. So EFA over the S&P, the globals are favored over the U.S. Inside the U.S. markets, it's large caps, then tech, mid caps, followed by small caps. The two strongest sectors in the world right now are emerging markets and Latin America at 65 and 67 respectively. The two weakest are U.S. U.S. mid caps and U.S. small caps, MDY and IWM. So the sector spiders, energy, technology, and utilities are leading the way, with financials and discretionary on the weak side. A graphical look at the U.S. And the world market model here. You can see the U.S. now, the Dow has dipped into the yellow, below average. Only the S&P 500 and then mid-cap value are above average in the U.S. Everything else is below average. Asia and Asia less Japan and Japan are all above average. Strength in Taiwan and India. Exceptional weakness in Vietnam and China. Latin America doing very well at 67, and emerging markets strong at 65. Brazil continues to dominate in the green here at 71. Only India is better. Spain at 69. Top ETF 30 from the ETF2 database. A lot of the same signals that we saw in the other BMR approach. Notice the junior gold miners have gone to green on strength and red on consistency. That's an early emergent trend in the precious metals. Otherwise, Alarian MLP infrastructure, and then the S&P Latin America 40. This is the Dow 30. The ones in the green and white are of interest to me, Chevron and Merck. The ones getting noticeably weaker is IBM, which is red and then yellow in the strength versus consistency, as is Walmart. ETF liquidity measures the top 30 ETFs based on daily dollar volume, average daily dollar volume for the last 30 days, and computes their ATR percentage. So you get a sense of what is really liquid intraday for trading. Shift now to the daily report from Friday for Monday. No signals in channeling and overreaction. You can see we got channeling in the extended set with TLT and DuPont, overreaction in DuPont. 5 symbols hitting the auto framer at 2-to-1 based on trade location. and IBM testing out at 3.6 to 1, Walmart at 2.2 to 1, and nothing firing on the RSI 2. Lots of good fraud candidates, however. Looking at the ETFs through the same lens, no signals on the swing side, a handful of dojis, and VIX testing at 3.9 to 1 on the auto framer. In the auto framer, the VIX, IBM, and Walmart testing out well, and then the regression line fractal framework got some excellent looking alerts here. Chevron, Intel, Cisco, Coke, and Travelers continue to dominate as they pull away from their 270 regression line. And on the ones that are underneath the 270 in the Dow, Visa, Pfizer, Boeing, all look pretty interesting. This is the 30-period regression line in the S&P, and compared to its own 10-day moving average, we're right at 1 SD above the 6-month average. It's had a nice rebound from this oversold condition. So if it were to cross its own 10-period right here, that would be interesting enough for me to really be protecting the against further downside. And that's everything I want to cover from the weekend report. I'll have more things to say tonight on the webinar with some trade frames on the swing trades. But as it stands now, we're getting ready to cheer the Americans on against Portugal. So let's have some good fun. Keep your wrists measured and your powder dry, and we'll see you in the chat room.